Sensex might cross a major 1 lakh mark within next 5 years. Also, some of the great investors out there on Dalal Street expect the Sensex to cross a major 2 lakh mark by 2030. Well, after going through all these statements, I just wonder that there might be some long-term drivers that will actually fuel the economy. Those drivers, these investors are betting on and we retail investors are totally ignoring. Because do you know what's the current problem is? That Nifty moves a 500 points and we just start panicking that is Nifty in overbought zone? Should we buy Nifty for long term? I mean guys, this is the biggest problem. Because of these short term movements, we are totally ignoring the bigger picture. The story that is yet to be written, the story these big investors are really betting on. So that's why guys, LearnApp has decided to come up with this particular video in which we'll together try to discuss some of the long-term drivers of the Indian economy that will equally be reflected in the growth of Indian stock market. The only aim of this video is to together develop a long-term vision on the India's growth story. So I mean guys, what are we waiting for? Let's get started. But guys, before moving on, as we discussed in the previous video, LearnApp has decided to give away its personal finance course exclusively free for YouTube viewers. So just by clicking the link in the description below and signing up on LearnApp, you can actually watch this course for free, exclusively free. This course also comes up with a personalized goal-based calculator that will actually help you to calculate the amount of money you need to achieve your personalized goal. So I mean guys, what are you waiting for? Surprise awaits you at LearnApp. So the first driver of growth for the Indian economy is evolving consumer attitudes. Now to start off with this point, we need to discuss a very interesting fact that we recently came across. Now do you know, there is something called a magic number in the world economics, and this magic number is called the $2000 per capita GDP mark. Now according to this macroeconomic theory, whenever a country's per capita GDP crosses a $2000 mark, the country experiences a next level growth in its GDP. The growth that it has never experienced before. And that's why this $2000 per capita GDP mark is also referred to as the acceleration point by various economists. So let's just look at some example to actually witness this acceleration point. China received the $2000 per capita GDP in 2006, post which for the next 10 years, its economy grew at 15% per year. This is clearly evident in this chart. A similar trend was seen in various other economies which encountered an inflection point once their economies touched a 2000 per capita GDP mark. And the countries were Taiwan, South Korea, Vietnam, Thailand. You can just see that whenever the country's per capita GDP crosses a 2000 level mark, the growth that they experience is just next level. Now you might be wondering then why this usually happens. Well, this is so because whenever a country's per capita GDP increases, the consumption pattern in that particular country experience a drastic change. The consumers in that country start spending on the discretionary items like automobiles, holidays, clothing, etc. And that's why such expenditure on the discretionary items just drive the consumption pattern of the economy to the whole new level. And we have a good news for you. India recently crossed a 2000 per capita GDP mark. So it might be possible that we are just at the beginning of this growth, the growth that we might experience in the future. So the second driver of growth for the Indian economy is favorable demographics. Now we know for a fact that youth population are the building blocks of our nation. But I need to present you a very important research that we recently came across. Now this was a research that was conducted by National Bureau of Economic Research. Now this research found out that a 10% increase in share of population over 60 years can reduce the country's GDP by 5%. Like, can you believe it? If the 10% population of 60 years of age group increases, the country's GDP can actually reduce by 5%. And one of the great life example is Japan, that how the aging population of Japan is actually de-accelerating the growth of GDP of Japan. But fortunately in India, the winds are in our favor. As we can see in this chart, even by 2030, 37% of the population will remain in the age group of 25 to 49 years. That means that our population will be younger than both US as well as China. What is even better, that while this 37% of the people will remain in the workforce, another 16% of population who are in the age group of 15 to 24 will be ready to work. Hence, the India's demographic is such that it can actually support the long-term growth for the India for a very, very long period of time. And it's very good for the stock market point of view, because as more and more people will be in the working force, they will definitely develop the savings as well as investment habit. And stock market can actually emerge as one of the main driver of savings and investment for these working population. So the next driver of growth for the Indian economy is technology and innovation. Now, we all knew for a fact that advancement in information technology is right there sitting at the heart of the country's growth. Take for example US. The FANG stocks, that is the Facebook, the Amazon, the Apple, the Netflix and the Google, together constitutes 19% of the S&P 500 index. So can you believe this? 1/5 of the nation is actually driven by 5 technology companies. However, this is not the case with India. If we look at the IT sector contribution to the country's GDP, it just turns out to be 7.7%, which is very, very less in compared to the advanced nations. But the picture seems to be changing now. With the advent of the startup culture and growing millennial population, the innovation rank has jumped from 81 to 48 in just 5 years. Also, have a look at this chart. Look at how disruptions during COVID has actually accelerated the trend even further. This chart shows the VC fundings of Indian startups. So the amount of funding that Indian startups have raised recently is around $22 billion. While if we look at the combined fundings that they have raised in the previous 5 to 6 years, it just turns out to be a mere $15 billion. So can you believe it? The total amount of funding that the Indian startups have raised recently is more than the combined fundings that they have raised in the previous 5 to 6 years. So guys, we know for a fact that how developed economies are actually driven by the technology companies, and this technology wave is just starting in India. So guys, it's not always about, TCS moving 5%, is it overbought or not, Zomato moving 10% and all. The picture is really big. The tech story is really big in India, and you need to develop a long-term vision to actually realize the power of this tech story. So the fourth driver of growth for the Indian economy is urbanization. Now, a simple definition of urban area is that a city or a place where more than 75% of the population is actually employed in the non-agricultural activities. These urban areas are referred to as the driver of growth for the modern economy. China is a shining example of this, that how urbanization process actually drive the economic growth of the country. China rapidly urbanized from 26.4% in 1990 to 59.2% today, making China a second largest economy in terms of nominal GDP. Now the good thing is that similar pattern is visible in the Indian scenario, where by 2050, 50% of the population will reside in the urban areas of the country. Now, of course, the obvious question arises that how urbanization can be a driver of growth for the country. Well, this is so because if we talk about the 2016-17 data, 42.7% of the total Indian workforce was employed in the agricultural and allied activities. But do you know for a fact that this 42.7% of the workforce only contributed just 17% to the GDP? So this might be possible that urbanization process will actually lead to systematic distribution of this workforce into actual productive areas, and the growth that the country will witness will be a holistic growth. Also, this urbanization theme is so prevalent that recently various fund managers have just came out with a fund based on urbanization theme. So the last driver of growth for the Indian economy is the income growth. Now, income growth is one of the most basic macroeconomic variables that usually we as an investor look after for. But before actually moving to the income growth scenario of the country, we need to present you a very interesting case of how compounding works in case of economies. Now, for India to become a 1 trillion economy, it took a massive 58 years. However, then to become a 2nd trillion economy, it took just 7 years. Now, India is almost a 3 trillion economy, and it just took 5 years to achieve that mark. looking at the current growth rate scenario, we should take less than 4 years to hit another 4 trillion mark. Now the good thing is that increase in GDP is equally supported by increase in the income level of the population. Have a look at this chart. In 2018, the upper middle income group and high income group comprises of 24% of the total population. Now interestingly, this 24% of the population drives 60% of the consumption pattern of the country. Now what's more interesting is that this 24% will become a major 51% of the population by 2030. Now at this point of time, I just remember Mr. Ramdev Agarwal sir, who rightly mentioned in one of our courses he taught on LearnApp, that as personal income of the consumer increases, it doesn't mean that they will start eating more. It means that once their basic necessities are fulfilled, consumers will move towards discretionary spending as well as savings and investment. Well, talking about savings, have a look at this chart. Still 84% of the total wealth of Indians are in the form of real estate, while remaining 11% is in the form of gold. Only 5% of the total wealth of Indians is in the form of financial assets. And guys, we know for a fact that only 2 to 3% of our Indian population actually is exposed to Indian stock market, and this got to change in the future. And that's why guys, LearnApp is on a mission to spread the financial literacy in the country and actually help you to direct your savings towards productive investments, towards productive financial assets, so that you guys can actually take advantage of the various drivers of growth that we discussed in this video. And guys, do not forget, as mentioned in the first part of the video, LearnApp is totally providing the free course of personal finance exclusively for you YouTube viewers. So guys, do click the link in the description below, sign up on LearnApp and watch your personal finance course actually free, that actually comes up with a goal-based calculator also. So guys, what are you waiting for? Just sign up on learnapp.com. And guys, do not forget to like, share and subscribe our channel, because that really motivates us to push such more content. So guys, see you in the next video.